Shares are down right now, about 2%. Nvidia's lower as well, but we've got Apple up and a few other the laggards that are actually working this morning. So it's kind of an interesting day so far. We're going to keep talking hardware and semiconductors, the morning trade in an overlooked foundry business. Alan Nuckman will walk us through that. Ben's going to join me here in a moment to take a look at some of the intraday action and talk about what's on the calendar here ahead of us. We've also got an IPO looming, Reddit, as we look at a pretty limited IPO market despite some frothing in overall asset prices. Kind of surprising we haven't seen more, so Reddit kind of leading the front on that. We'll talk animal health and the online vet business with Elanco's team, CEO joining us, talk about what they're going to do to their business going forward. And the chart masters got some pretty interesting ones for us. GE, after its big, successful run, and Costco as well after last week's numbers. I got Ben with me here in studio, host of Future Show. Ben, the Russell fades here. Definitely some chop this morning. You can see there's finally a two-way trade developing in NVIDIA and the hardware. It's kind of going back and forth instead of just straight up.
Yeah, no longer buy with both hands and just close your eyes and hope this thing continues higher, because we have seen a little bit of a pullback here today, continuation of some of the selling we saw yesterday. Earlier I mentioned how well we've seen Asian markets come off. So to begin the week, yeah, not necessarily a start that the bulls are looking for. You mentioned the Russell. That's a bit of a standout player here to the downside, currently down around 0.75%, but actually it was positive this morning earlier when we started off the Future Show here around 8 Eastern. So yeah, we've seen a little bit of a turnaround. I'm also keeping a close eye. Interestingly enough, you've got yields which are lower here as well today. So this is not necessarily a rate story. They're comfortable right around or just above 4%. This is maybe just a little profit taking, maybe just a little bit of selling as we come off historic all-time highs.
Dollar's up a little bit here. Bonds kind of flattish. It's kind of interesting that there's not a bigger bid into bonds, considering that the real pillar of the market with NVIDIA is actually a little soft here. But we don't want to read into it too much because it's literally just kind of a couple of days. It's like 2.5 days basically of the chip maker trade slowing down a bit. But here's the thing, the question of where to go if the money's going to come out of that trade or buy other things, does it come out of bonds on a week with inflation? If people have been buying bonds, they go, you know what, if Apple's going to bounce back, or if I want to try and buy something else, why do I want to keep owning so many bonds if we've got inflation? I mean, I do wonder kind of if the fixed income trade will work its way back into this conversation this week.
Yeah, I mean, in all fairness, I think it's something to keep an eye on as well. I'd agree. One thing I'm sort of watching is this 4% level. Any declines below that sort of start to raise or spark some of those concerns in terms of, why are yields falling?
Right. Slow down.
Slower economy tends to be the answer for that. But I think, again, we've been arguing for a while. Crude's kind of contained. The dollar's range bound. Not a lot of conviction or follow through or breakout type activity there. And even yields right now, as long as they're below that 5% high that we saw end of last year, above the 3.75, 3.8 level that we recently just tested, one could argue that that also sort of feeds into, kind of supportive of stocks and the move up that we've seen to the upside. There's the dollar, very much range bound, very much contained. And if anything, now retreating off a key level right around 105 where, it had the bulls, stock bulls, kind of on their heels a little bit there temporarily. But, I think, again, these markets in at current levels here have been very supportive of what we've seen in stocks. I would think the dollar to the downside, if it were tied to yields, would be a bit of a concern. But this weaker dollar here, Oliver, that we've seen recently, higher here today by about 0.2%, but back below 103 recently, is more tied to strength that we've seen in the Japanese yen than anything else, and some of the expectations tied to the BOJ there after recent data, stronger than expected CPI and such.
I do wonder also, with Chinese stocks pretty strong this morning too, if there's potential there to kind of shift some of the narrative. I think the point here is that we're trying to kind of sleuth through possible scenarios that could unfold if the status quo scenario changes. And that status quo scenario, of course, has been concentration in semiconductors, NVIDIA-driven rally. That's basically all you really needed to know about the market.
Well, the change, one could argue, is not going to be a shift to small caps, right, with NASDAQ and small caps lower here today. So maybe it is going to be kind of this shift back towards China, which has been lackluster, right, for a while now. And I think that's also, much like the dollar, yields crude at current levels, very supportive of what we've seen in terms of U.S. stock, right? Not a lot of enthusiasm for Asian stocks. China specifically, I think has helped U.S. Equities. But let's take a look at some of the data here, Oliver, because speaking of Asia, there were some numbers overnight which actually raised some eyebrows. We can begin with the GDP data of Japan, which came in a little bit stronger than expected. Mentioned strength in the yen, tying into weakness in the U.S. dollar. Expectations the BOJ is going to end up moving away from that negative rate policy. Well, this sort of feeds into that. It came in at 0.1%. They were looking for a decline of down 0.1%, so contraction was expected. We got expansion. Prior was down 0.7%, but I also noticed in China we had some CPI data, PPI as well, but let's focus on the CPI, Consumer Price Index first, which came in higher than expected and triple what it was last month at 1%. It was up 0.3 prior. They were looking for 0.7, so they were looking for an increase on the month-over-month data, but PPI did come in down 2.7. But food prices, Oliver, I mean, really what was behind some of the gains that we saw. You expect to see a fair amount of spending in the Lunar New Year, that holiday, and we saw acceleration there, but definitely it was food prices for the most part. Pork, for example, rose 0.2% in February, following a 17% drop in January.
Yeah, it's pretty interesting how much of a difference there is when we basically go to the other side of the globe. In the Western economies, we're so focused on the central banks getting ready to cut, ECB and the Fed, basically a timing question.
Combating inflation.
Yeah. All right, so on that front, though, basically this week we're watching the June odds for the Fed because that's where now the conviction is that they're going to begin just shy of 70%.
Yeah, and you know, I think my guess is we're going to start to see those June odds get pushed back a little bit. I think that we got a bit over our skis, right? The market still continues to focus on the positive. It'll be interesting if the June expectations get pushed back. Will the market be able to sustain these upper levels? I would argue that the market, and I've said this for a while now and a couple times, I think you know where I stand on this. As long as the market's content with 5% being peak, then we can continue to see a market that holds up or near these historic levels. Adding to gains with yields, you know, holding above 5% might be difficult, but this is a market that's been extremely resilient. So.
Yeah, all right. Good setup here for this week on the macro front. Appreciate it, Ben. And look at the central bank differences between what's happening here and abroad. Let's talk the IPO market. It's been a little quiet despite indications of risk tolerance rising and frothy valuations. There's one company that's ready to break, though, the mold. Kevin Green joins us to talk Reddit. All right, what's the plan here for this thing, KG?
Well, it appears that Reddit is actually preparing to have this IPO here. We don't have a listed date yet, but the market is expecting that this will actually occur here in the next couple of weeks here. Right now, you're hearing chatter that the IPO will start between $31 and $34, selling around 22 million shares to the marketplace here and trying to bring the valuation for Reddit up to $6.5 billion. Now, that would include the full dilution of those shares. And once again, we have some of the major players actually participating in this offering, from Morgan Stanley to Goldman Sachs to even JP Morgan Chase. And this is one of those items that you just talked about, just seeing the IPO market thaw out a little bit. Now, we've seen a lot of enthusiasm when it comes to the equity market as a whole, but we have seen some lackluster performance when it comes to some of the IPOs that we've already seen this year, and even to the late last year as well. And we know that we have a high interest rate environment, but there's just also other areas where a lot of private equity and fundraisers can actually go in order to try to raise some money here. So that's kind of what we are seeing right now. For Reddit, they continue to try to monetize their business, looking at trying to license out some of their data to some of these AI companies in order to train models potentially, or even to a news organization to be able to develop and create real-time news events, if you will. So I think this is going to be a very interesting IPO to say the least here. But once again, thawing out of the market, yes, but we're going to have to see what the performance is going to be for the first 2 or 3 months for this particular stock, because once again, the IPOs that we have seen have been lackluster, to say the least, outside of maybe Kava.
Yeah, there was some data from the NASDAQ. We talked to their team about indications of higher IPO probabilities, but it hasn't quite come to fruition yet. They've basically got an index that kind of tracks the environment, how fertile it is for debuts, and right now it would point to a significantly higher level of IPOs than what we're getting. This one, I guess, makes sense to kind of take the first leap because there's so many things tied to its user base that are in vogue again. We got crypto surging, we've got stocks at all-time highs. I mean, if we tie the Reddit investing community generally to the higher risk stuff that they like, I mean, I don't think that's that big of a secret. You know, it seems like decent timing.
Yeah, definitely. And then we're also in a election cycle type of year as well. So that should also be a tailwind when it comes to user activity. So I'm right there with you, Oliver. I mean, we continue to see the ad space, though, when it comes to social media companies starting to tighten up. We continue to see Facebook, or Meta, if you will, gaining market share when it comes to ad revenue. And then other players like Snapchat and some of these others are not gaining as much. So